Good morning, children. How are you all? Hope you all are fine. I am also fine, students. Okay, shall we go back to our lesson? In accountancy, we have completed already 5 chapters. Now, today we are going to learn the 6th chapter. Okay, subsidiary books. So, before going to this one, just we will have a small recap. What we have learned in accountancy, that we know how to prepare the journal entries, isn't it? Journal entries, that is the first step in the process of accounting, isn't it? Journalizing. So, this one is the alternative of preparing journal entries. Okay, we know one day, in the book they are given maybe one day, one transaction. But just imagine a big business concern, large business organizations, they will have a plenty of transactions. Okay, the repetitive transactions. For example, the sales. Just to take an example for this, how many sales, cash sales, credit sales take place, isn't it? So, whether they can sit and write each and every entry for all these transactions per day, it is impossible, isn't it? So, they have business, that business organizations have different types of transaction. Okay, depend upon the nature of the business. Okay, that purchase sale of the textiles will be more in the textiles, isn't it? Then a grocery shop, there are also different kinds of things will be sold, that small quantity for different customers, isn't it? So some transactions it will come again and again, they are called repetitive in nature. Okay, some transactions are of repetitive in nature, means repeatedly it will be happening. Maybe the sales or purchases, or every day or within 2 days, 3 days we may receive one sales return, or we may send some of the purchases as returns to the suppliers. Okay, so that repetitive nature, we cannot sit and write each and every journal entry in the books. Okay, maybe one book will be finishing and it is impossible for the clerk to write all these entries, isn't it? So they have decided to enter, they have divided all these transactions into two. One is cash transaction, another one non-cash transaction, that is called credit transaction. Okay, cash transactions and non-cash transactions, or they are called the credit transaction. So here these cash transactions will be entered in the cash book. Okay, that we will learn why they have maintained this one. So for each and every transaction, maybe for cash transaction, one separate book, cash book. Then this non-cash transaction, here many credit transactions take place. For example, purchase of goods on credit. Okay, their purchases book will be there. Then if we send back some of the goods to the suppliers, they are called that purchases returns. Okay, that will be written in another book, purchase returns book. In the same way, sales book. Okay, sale of sales book, we will enter only the credit purchase of goods. Okay, that we will learn this one. Okay, so that journal entries are now divided into various books. Okay, they are called subsidiary books, or this various books, separate books, are also called special journal. Okay, these books are called special journal, or a book of primary record, or a book of primary entry, or subsidiary books. Okay, subsidiary book. Each one, cash book is a main subsidiary book. Then all the credit transaction, we will have purchases, credit purchases of goods will be entered in the purchases book. Okay, then credit sale of goods will be written in the sales book. Okay, then the purchases returns, for which we did for which we do not receive cash for those goods will be entered in the purchase returns book, and sales returns for which we have not paid cash will be entered in the sales returns book. Okay, so now we will see the types of this subsidiary books. All the cash transactions will be entered in the cash book. This one we are going to learn in the 7th lesson. Okay, next lesson. Okay, cash book. Now we are going to learn in this chapter this credit transactions. What are that one? Purchases book, purchase returns book, sales returns book, bills receivable book, bills payable book, and journal proper. It is not a book. Here any journal, any transaction which cannot be written under any of these 7 books will be entered in the journal. Okay, like a journal entry. For example, we write the credit purchase of goods here, credit sale of goods. If we sell or if we purchase furniture for credit, then we can prepare a journal entry. Okay, that we here know where we can enter. But if we purchase an asset or a furniture for cash, then we will enter in the cash book. If we purchase an asset or for example a furniture on credit, we can never enter anywhere here. So that will be prepared as the journal entry. Okay, that is called journal proper. Okay, this is one of the 2-mark question. What are the subsidiary books? Name 4 subsidiary books. You can write cash book, then purchases book, purchase returns book, sales returns book, any book you can write. Now the advantages we are going to learn. Okay, here what are the advantages of having these subsidiary books instead of the journal entries? Okay, so first advantage, this is one of the 5-mark or 3-mark question. Okay, short answer. So at least you learn the heading. Proper and systematic record of business transactions. Okay, here we record all the business transactions systematically. For example, cash transaction will be entered in the cash book. Then credit purchases of goods will be entered in the purchases book. Then credit purchase of assets will be entered in the journal proper. So it is systematically we have recorded. We are classifying all the transaction and we are grouping under one head. Okay, credit sale of goods in the sales book. Then credit purchases of goods will be entered in the purchases book. Okay, then cash payment, cash receipts in the cash book. So it is properly and systematically we record all the business transactions in the subsidiary books. Okay, then second advantage, convenient posting is possible. Okay, because we have each and every book, okay, the subsidiary book. So in that book we can post easily. Okay, no need of writing, preparing journal entry, then posting. Directly we are posting. Okay, example, purchase of goods on credit, we enter in the purchases book. Okay, so no need to prepare, sit and prepare first journal entry, then posting. Okay, directly we post in the subsidiary books. Okay, so that is, it's very convenient. It is easy to post the not journal entries, the transactions in one place. Then division of work. Since we have around 7 subsidiary books, each work, maybe the purchases book can be done by one clerk. The another book, each book will be completed, will be entered by one clerk. Okay, at the same time everyone will post everything. Okay, so division of work is there. That one, each person can do his own work, isn't it? So that is the next advantage. Because of this division of work, efficiency of the persons, the employees is possible. How they will become specialized, they become the specialist in that same particular work that that person do. Okay, for example, the clerk, the person one who enter the purchases, he comes to know how many purchases came on that particular day, how much that goods, what type of goods that they have received on that day. Okay, he becomes efficient in his work. Then it is helpful in decision making. So because we enter each one in one head, so we can easily find out. Okay, for example, one example that we have written sales returns. Sales returns should not be more, isn't it? By seeing the sales returns book, they can come to know every day how much is the sales return, or monthly they can consolidate, and as per that one they can take some measures, okay, some legal measures to reduce the sales returns. Okay, why? What is the reason? They will analyze the reason for the sales returns and they can reduce it to some extent. But if the same thing is written in the journal entry, it will be little difficult to find out. Okay, how much sales returns is coming. Okay, then next one, prevents errors and frauds. Here, why, how they prevent errors and frauds? Because of that specialization, division of work. Okay, each person is doing one work, and this work will be automatically checked by another clerk. Okay, so that is called internal check. Every clerk, every person in the accounts department do one work. So the first person's work is automatically checked by the second person. Okay, so when he does, he will check this one also. Okay, automatically it is checked. So any error or fraud that can be detected easily in this system of recording. Okay, that means by preparing the subsidiary books. Then 4 more items, 4 more points available. Seventh one, availability of requisite information at a glance. Okay, that needed, requisite information means needed. Needed information can be availed at a glance. At a glance means at a look. One look we can find out. For example, that credit sales. What is the credit sale of this month or this day can be seen by looking once into that purchases book. Okay, or sales book. How much is the today's sale? Okay, or how much cash we have received from the cash book. Okay, how much cash we have received, how much cash we have paid can be found out at a glance. At a look, we can have the information, needed information. Okay, then detailed information. Yes, we have detailed information because purchasers book, or what all the credit purchasers, who are the suppliers, how much is the quantity, everything will be entered clearly got from that purchasers book. Okay, so detailed information of a particular transaction can be availed, or that complete information also. The word, for example, today's purchases, everything is entered in the same book. So by seeing that we can get that information. Okay, then another main advantage, saving in time. Here preparing journal entry is little tough, but entering in the purchasers book, in the subsidiary book, is very easy. Okay, so here one person will be entering the purchasers book, another person enters the sales book. Okay, each clerk does his own work. So directly they are posting. This is like account. Okay, purchasers book like account, but we prepare the account also, purchasers account. Okay, total of the purchases that is coming here. Okay, posting. because here we enter in the subsidiary book and we next post that one in the account, purchases account directly, and the creditors account. Okay, so instead of preparing the journal entries, we are entering in the subsidiary book. That saves a lot of time of the accountant or the clerks one who do this, engage in this work. Okay, then next one, labor of posting is reduced. Here, posting from the journal entry, each one should be posted to the purchasers account, sales account. Okay, that is saved here. Labor of posting is reduced. That means the work of posting. We directly enter in the purchasers book and only one word we have to write in the account. So that one is getting reduced. Okay. So posting is reduced. So here we have learnt all the disadvantages, advantages, and we do not have any disadvantages. Okay, advantages and the meaning, you study these two question answers. Okay students, thank you very much.